India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Friday morning, last trading session of the week, and it's been quite an eventful week, especially the first 2 or 3 days. Last few days, maybe a little more flattish and trendless. We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, morning folks. I guess the smiles are wider anyway because we managed to make it through the end of the week.
Yeah.
And for the market also, I guess it's been more about consolidation than a one-way decline. So I think it's a big fight that's been ongoing between the bulls and the bears.
Well, and overnight, Tesla was a stock to look at.
Yeah.
Mr. Musk is $25 billion richer overnight. So that was clearly the big talking point overnight. And for our own markets, let's see how we get through today and then head into the festive week. So let's get straight to the action, Prashant.
Absolutely. And so yesterday was largely trendless, right?
Yeah.
I mean, it was actually a very ranged session as well. Not a big swing day, not 200, 300 point kind of swing days like we've had in the past. So ranged, limited move, no major change in the setup. And I think that's good news, right? For once, you're not seeing wild moves and you've got to reassess every day. The levels will change. We'll get to the Nifty in a bit. Overnight, US markets are also looking a little better. So 3 days in a row, equity indices were falling. There's rose, S&P was up a quarter, NASDAQ was up as well. Treasuries, by the way, are also a little better as compared to the last 3-day losing streak. As I said, a quarter on the S&P, NASDAQ, 0.75%. Big contribution from the Magnificent Seven names. And of course, the leader there was Tesla, 21% gain on essentially earnings beat and positive commentary for 2025. And that's a large stock. Quite incredible. The 10-year was down 4 basis points, 4.21. But of course, I mean, even if you take a look at what's happened over the last 5 days, 10 days, yields are higher. A dollar index, which had been rising non-stop for the last 3 sessions, that also came off about 1/3% lower to about 104. But again, I mean, we are higher compared to 5 and 10 days back. Good macro data. You had home sales numbers, which were better. Initial jobless claims numbers, which were lower. Better than expected, lower than expected. So both good in those accounts. You had oil prices about 1/3% lower, 74.79 is 73 is where we left off, and we're around that price this morning in Asia as well. And as I said, there's not very much in terms of a change of setup. We are in a range, and if you look at the levels, on the way down, 24,073 is the number, which is the support, and that's essentially the daily lower Bollinger Band. The levels have moved, but the indicators are the same. And of course, on the upside, for the market to break out, you've got to take out 24,626, which is the 40 hourly exponential moving average. You have to sort of get past the hourly and daily averages for the market to see any resemblance of recoveries. For the Nifty Bank, low of 51,107 is a minor support. And then, of course, we get to the 7th of October low, which is 50,194 if 51,107 goes. On the way up, the important resistance is the 20-day moving average, which is now moved to 51,876. So very close by levels, but you're heading into a weekend, and earnings, of course, are coming in hard and fast. So a lot happening. 6.5 points lower on the GIFT Nifty implied open. So it's a flattish kind of start. Will we have a flattish day once again? And I said this yesterday in the morning as well. A lot of the FI selling has happened. Combine that with the fact that you already have about a 7-8% pullback from the highs on the Nifty. For the last couple of years, the underlying impulse has been to try and buy the dip, which seems to have been broken a little bit at the margin. But 7-8% from the highs, I think you got to start to think about whether this is it, or there is substantially more. I don't think there is substantially more, maybe a little bit of flatlining perhaps from here out. Surabhi.
Okay, well, absolutely. I mean, we've spent the better part of the week in that range. I think at the end of Friday, we closed the day at around 24,800 odd. we are, a couple of 100 points off it. So not a very meaningful slide, but yeah, it's been painful depending on the stocks that you're holding and the accidents that are happening in the equities market. Speaking of course, global markets, the headline on Tesla is really, really interesting because yes, the stock soared 23%, but it's a huge bull versus bear debate over there. Some people are saying that the profit beat, the massive beat, which is why the EPS was blowing past expectations, was because of these credits, these environmental credits that Tesla has. It's an EV producer. You can trade those credits and sell them off to the other automakers who need them. And that was responsible for a lot of the profitability bump that came through. And also, massive debate raging on the whole driverless or self-driving car initiative, whether it can deliver the kind of revenues and the robo-taxi optimism that Mr. Musk has been pointing out. So that's an interesting one internationally. But closer home here in Asia, important to watch out what happens in Japan over the weekend as well. We've got the inflation numbers for Tokyo out, which are showing some kind of a cool-off in inflation. It's come down to about 1.8% for October. The weekend is important for Japan because the country is going into a general election. And the anticipation is that the ruling party, the LDP, could perhaps lose absolute majority for the first time in many, many years, in over a decade. So, we need to see if that tweaks anything in terms of monetary or fiscal policy in the country. So that's an important geopolitical event to keep in mind as well. For us, like we've been pointing out, it's been a week of consolidation and Nifty's had the slow grind down. And it's about sort of banks looking to come to the rescue and offset a lot of the negativity that we're getting from autos as well as consumers. Speaking of the fund flow picture, the problem is that, the daily number is still a very heavy negative number to deal with. Again, yesterday, about 5,000 crores of selling. Domestic buying was not actually enough to even offset that yesterday. Let's talk results because that's what it's all about. And we've got a couple of disappointments already, starting with IndusInd Bank. The net interest margin is down. The NII has missed estimates as well. And there's a big, big slide in profits, 40% fall because provisions have gone through the roof. So asset quality issues are going to be a talking point for this bank as well as we go forward. ITC, the top line growth is great. Particularly in the agri business, but margins are under pressure big time. So let's see what the market wants to go with, the good or the bad, on ITC. Godrej Consumer is a much better show. In this whole consumer debate that's raging, we have no complaints from Godrej. It's matched the expectations on most parameters. The margin is actually up a little over 100 basis points as well. So Godrej is a good one. And Dixon is the best. So if you're looking for green today, if you're looking for some positivity this Friday morning, then Dixon's the stock for you. And it's in line with Amber, right? Amber had a great showing. Dixon's following that up. And we'll be talking to the management as well to get more on it. NTPC, well, if you're looking out for PSUs, the Q is not very good on this one because it's missed the mark on several parameters, margins under pressure, etc. Revenues also a miss. So not quite there. And then you've got some more weak names like Petronet and MGL. We'll keep going through this. Short point earnings are very, very mixed. IndusInd is the one to watch out for, perhaps on the way down. And Dixon is going to be the one on the way up. Today's a busy day as well. We've got today's numbers there, JSW, Steel, Interglobe, quite a few of these companies reporting today. So sure to keep us busy. Nigel. Well,
that's right. And the Nifty is down close to 7% from the recent peak. And today they're bracing for the fourth straight week that we're going to be ending in the red. Well, I don't know when was the last time that we were on this losing streak, so to call it. But there are a couple of positives today. And let's start with the Qs overnight. The US yields, well, they are a little lower. Brent crude prices are a little lower. And the dollar index as well did cool off by close to around 0.4% overnight. So I like this. This is the positive handover, irrespective of what the US markets do. Overnight, if you have these cues, that's good from an India market perspective. And the big fear has been on consumption here in India. But there were a couple of results that came in yesterday that didn't look so bad. And Nuvama, well, they have come out with their note and they say that urban demand is challenging, but it's not doom and gloom like, that picture that it was looking like yesterday. Because you had a few good earnings, whether you're looking at Bikaji, you're looking at Colgate, look at Godrej Consumer and United Breweries, all of them reported anything between 5 to around 15% volume growth, which is good. Even ITC, the numbers are not bad. In fact, they look quite good and it has valuation as well as dividend yield support. The cigarette volume growth as well was more or less in line with what we're working with. So the short point is that consumption fear may not be as bad as anticipated. And now the festive season is important to watch from here on. What about the FIs? Well, in yesterday's trading session, you had a swing factor of 21,000 contracts. Longs added 10,000, shorts covered close to 12,000 contracts. So 22,000 contracts was the swing factor. Yes, they continue to remain net short on the index. But now the net short positions came down from around 1.7 lakh contracts to around 1.5 lakh contracts. Let's look at the options data. And it seems there's a bit of a strategy in place. The 24,400 call as well as put You put that together, and the strategy would be a short straddle that's taking place out here. The premium you're pocketing is around 350 rupees. So in that sense, you're working with a bit of a range, 24,050 odd on the downside, on the upside, 24,750. So that could be the range that you're looking at in the near term with a contract that's going to expire on Thursday. But the 100 DMA becomes extremely important, that the bulls will like to take us closer to there and then try to break this mark. So that becomes the first level of resistance in terms of the Nifty. The Nifty Bank, that was showing signs yesterday yet again that it wants to do something better. So now, in fact, these are the levels you're looking at. The 100, the 50, as well as the 20 DMA. It's already taken out the 100 DMA in yesterday's trading session. You wanted to get past the 20 DMA, and then maybe, in fact, some of the shots in the system will get covered out. The problem is that IndusInd Bank's numbers were an absolute howler, and Abhishek will get to that in further detail. But on asset quality, on NIMs, it was a big disappointment out there. However, HDFC Bank, after a while, it's been the outperformer of the week. In the last 5 sessions, it's up 5.5%. And now it's headed to the recent high. The 52-week high is around 1800 odd mark. So you'll want to keep an eye out on that one. And as we know, the other constituent, which is Reliance Industries, is getting some support at the 2600, 2650 odd mark. So that's the stock to watch. If we need to bounce from here on, both these two will have to play a role. But I think this morning, this Friday morning, I'm a little bit more optimistic than I've been earlier this week.
Okay, all right. Yes, absolutely. HDFC Bank has been really helping the Bulls' cause as it sort of at times single-handedly tries to offer a good counterweight to all the downside that we've been seeing. Let's move on and kickstart the show with the equity call of the morning. Rhythm Desai of Morgan Stanley says return on equity rose to a 13-year high of 16.9% in FY24, driven by margin expansion. He says a private capex cycle is underway that gives him confidence that ROE is set for higher levels in the next 3 to 4 years. He says rising ROE equals to rising share prices, more so as ROE versus long bond yields is up and at a 15-year high.